Hey everyone, Reed here. 3 days ago, a wallet that nobody was watching moved $14 million in a very specific pattern, and I think I know who's behind it. Let's get into it. While the general public is currently paralyzed by the market's downward trend, this massive amount of capital is being repositioned with extreme precision. This wasn't a standard transaction that triggers retail alerts. It originated from a wallet that had stayed completely silent for years, successfully evading the usual surveillance tools. A move of this size, executed while the broader market is bleeding out, suggests a highly sophisticated strategy is at play beneath the surface. To understand why this capital is moving now, we have to look at the macro environment that is currently acting as a smokescreen for this operator. By tracing the transactional footprint, we can work backward from the blockchain data to identify exactly which entity is pulling the strings. Deconstructing this $14 million move provides a blueprint for how professional capital behaves during a panic, offering a path to navigate the current volatility rather than being consumed by it. Standard retail behavior is currently dictated by a very clear set of numbers. Bitcoin is trading at $63,831. Over the last 30 days, that represents a price drawdown of 17.39%. If we measure from the all-time high of $126,080 reached back in October 2025, the drop is even more severe, a 49.37% decline. Losing nearly half of the market value from the peak typically results in a total collapse of retail trading psychology. We can quantify that collapse using the Fear and Greed Index. Today's score is 23. A 23 is officially classified as extreme fear. For context, the monthly average is only slightly better at 19, showing that the market has been under heavy pressure for weeks. We even saw the index hit a low of 8 this month. That is a level of panic where almost no retail buyer is willing to step in. At these levels, the public usually freezes. They stop buying, they stop researching, and many capitulate and sell. While the public is staring at these red candles and feeling defeated, the on-chain data shows a different reality. Whale operators use this public paralysis as cover. They look at the same data points retail sees, but they interpret the extreme fear as an opportunity to move large sums of capital without attracting competitive attention. This brings us to the specific dormant wallet that just activated. After years of inactivity, this address suddenly processed a $14 million transaction. The pattern is highly specific. Rather than a single bulk transfer, the capital moved through structured pathways to minimize its visibility on the block explorer. To figure out what this capital is doing, we have to compare it to the rest of the market. Ethereum is currently priced at $1,727, resulting in an ETH to BTC ratio of 0.02705. This low ratio indicates that capital is not flowing into altcoins. If this $14 million move were a rotation into riskier assets, we would see strength in this ratio. We don't. We see a similar story in gold proxies. Pax Gold is trading flat at $4,149, with zero change over the last 24 hours. A stagnant gold price suggests this isn't a flight to traditional safe haven assets either. The capital isn't running to gold, and it isn't diversifying into Ethereum or altcoins. This was a surgical crypto-native maneuver. It is a massive accumulation play happening precisely because the public is too afraid to participate. We should talk about why these moves are so easy to miss when the market is down. It is difficult to stay objective when your portfolio is dropping 20% in a month. I've been there, staring at red candles and wondering if the entire ecosystem is actually falling apart. That emotional drain is a distraction. It's the reason most analysts miss the signals being sent by these large, quiet wallets. A dormant whale wallet doesn't have emotions. It operates with mechanical precision, executing a plan that was likely drafted months or years ago. When the index hits extreme fear, 90% of analysts are looking at the wrong things. They spend their time on technical analysis, trying to predict the exact bottom, while ignoring the actual flow of capital on the blockchain. Institutional players use this time to consolidate their positions and reorganize their holdings. These whales rely on the cover of retail panic to execute their strategies without being observed by the masses. Market intelligence comes from watching what the largest capital is doing while everyone else is too afraid to move. Let's get into the technicals. How did we link this specific pattern to a single operator? We use a method called wallet clustering heuristics. Large entities rarely move $14 million in a single obvious transaction. That would be too easy to track. They break the capital into smaller, fragmented amounts across dozens of different addresses. These chunks are then moved through temporary intermediary wallets to create the illusion of unrelated activity. Clustering is the forensic process of finding the invisible threads that tie these addresses back together. We look for specific markers, identical timestamps, shared fee structures, and the exact same destination patterns. When these metrics align, it proves that all these separate wallets are controlled by a single entity. Our analysis of this $14 million move points directly to a major institutional OTC desk that historically handles accumulation for the largest Bitcoin ETFs. Identifying this operator as a primary liquidity provider for the ETFs tells us everything we need to know. The institutions are using this panic to fill their vaults. The extreme fear index is scaring the public away, but the on-chain reality shows sophisticated accumulation. Don't let a 49% drawdown blind you to the fact that professional desks are buying the same assets you're afraid to hold. To survive in this ecosystem, you have to follow the flow of capital, not the flow of public sentiment. And that's the breakdown. 3 quick favors: like the video, subscribe, and most importantly, share this with anyone who's holding a bag in that ecosystem. They deserve to know. See you next time.